Hi, everyone. Today I'm here with Dr. Andy Schell. Andy is one of our contributing authors for the Mortgage Manager Mastery Book, a sales leadership book for new and experienced managers in the financial sector, including the mortgage industry. Andy wrote a fabulous chapter titled Decoding the Branch P&L, Mastering the Profit Levers Every Leader Must Control. Andy is a founder at MBS Advisory. Previously, Andy's had a long track record at senior leadership levels with banks and other institutions. Andy, thanks for joining me today. I loved your chapter and can't wait to ask you this question, what's the one big idea from your chapter that you would like to share with our listeners today?
Well, hi, Pat. It's great to see you. That's actually a difficult question. It's hard to pick just one topic.
Right.
Accounting, talking about accounting is like going to the dentist. We know we need to do it, but nobody wants to. So I could have written a chapter on strategy because people like strategy, but no, I get accounting. Thanks for that, Pat. So but
Sure.
accounting is important. Accounting, without accounting, we can't understand profit. So I think the big idea would be that profit is not random.
Hmm.
Profit is planned.
Hmm.
And planned profit means we're not going to guess about pricing. We're not going to guess about results. We're going to read the roadmap. We get a roadmap. Our financial statements, our P&L
Yeah.
is our roadmap, financial roadmap, and we're going to follow that. So we normally, when we talk about mortgage lending, we talk in terms of volume. We talk in
Right.
terms of volume and margin. So I want to make a one comment about this. In my years in interacting with branch managers, this comment by Mark Twain comes to mind, and it's actually attributed to Mark Twain, where he says that it's not what you don't know that gets you in trouble; it's what you know for sure that just ain't so.
Right.
It's the part about that I'm right. Volume plus margin equal profit. Just because you think you're right doesn't guarantee it. So we need to be open to ideas and considering new things. We need to understand that we need volume to make profit, but not all volume generates
Right.
profit. Sometimes volume can generate a loss. So we need to understand these things and we need to measure what we're doing. So just I know I'm only supposed to talk about one thing, but let me mention also about measurement. So measurement matters, and measurement's been around for a long time. There was a study in 1927 called the Hawthorne study, and they
Oh,
found that workers produce more when they know they're being measured. As a branch
right.
manager, we measure turn times and customer satisfaction and profit cash flow. But the thing that we have to do in mortgage lending measurement is we have to measure profit per loan. This is essential.
Right.
It's absolutely important. And as a challenge, as a division of a bank, we don't always get the tools that we need. I've done a
Mhm.
lot of work in studying branch management. I've actually done research, academic research on how branch managers use financial statements. And one of the observations is that the branch managers feel like the financial reports don't accurately reflect their financial performance, even to the extent of it being indecipherable. And some of the reason that occurs is because the bank will include the pipeline profit derivative asset. And not to get deep in the weeds of accounting, but it makes it look like you have more than you actually do. And it causes a disconnect between profit and volume. So we have lots of reasons why we get in trouble. And I know, Pat, you're a longtime capital markets person. I've been in capital markets. I
Mhm.
teach about hedging, and what I
Yeah.
try to do in that teaching is demystify the capital markets black box. Well, this chapter on accounting and finance and profit is intended to help deconstruct, take it apart, and demystify the components of the P&L. It's not that hard, and by doing that, then hopefully branch managers will be able to use it as a tool to guide their next steps.
Well, I agree with you 100% for sure. And we'll have to do a podcast that go into longer depth because you're so right about this. And I do think there is a disconnect between they think volume is profit, which is not the case. So great point. Talk about the action step that managers or management can do to implement what you're talking about.
Well, it's an extension of what you just said. Don't
Mhm.
assume volume and margin as profit. We need to go
Yeah,
deeper. So we need to learn to calculate break even. We need to learn to
right,
calculate key performance indicators, KPIs, on all the components that are in a mortgage profit and loss statement, the revenue, gross margin, operating overhead, and profit. We need to have a way of knowing how are those quantified in terms of volume. So we apply KPIs, key performance indicators, to these things, and then we can also then calculate break-even volume. So we know what that number is, not just gross revenue, but gross margin, or how much money we need to make. So these details are explained in the chapter, and I go into pretty much detail about the
right,
accounting side of this. And like I said when we started, it's like going to the dentist. Nobody wants to learn accounting, but you really need to understand the relationships between revenue, cost of sales, gross margin, overhead, and profit, and understand that in revenue we have several elements. We have gain on sale, which is a huge piece of this. We also need to understand financial dynamics, because when we generate gain on sale, that's a function of the rate. And if we
yeah,
agree to cut the rate by a quarter, that can actually reduce the gain on sale by a full point. So if
right,
we offer a concession and offer a quarter or an eighth in rate in concession, that's actually a big amount of
right.
profit reduction. So we also need to know about staff motivation and staff effectiveness and focusing on profit. So all of these are in the chapter. So, but as we focus on the things that increase profit, the things that boost profit, well, it's pretty easy to say. It's hard to do, but increase revenue and decrease expense. The more higher revenue we have,
Right.
the more profit we have, the more sales we have. Not always does it mean the more profit we have. We need to be careful, because when we talk only in terms of volume, what about the concessions? What about the
Mhm.
expenses? So we need to be careful about this. So I want to talk a little bit about expense as one of the components of this. I know it's a boring thing to talk about, but like I said, pretend we're in the dentist chair. We're doing this because we have to. So reducing expense comes from spending less, and we do that by avoiding unnecessary costs. So when I've been the CFO of different organizations, and I talk to branch managers, I would talk about, let's view expense on a return on investment basis, the ROI. What's the ROI of this expense? We're going to invest in the office. So what's the ROI of that? It's important to understand this relationship between expense as an investment in generating revenue and the amount of revenue generated because of the expense. So that's, let me say that one more time. It's the relationship between the
Mhm.
expense as an investment in the branch to generate revenue and the actual amount of revenue that's generated. So that's important. Let's think about it this way. And I know you know this, Pat. We've both been in the business for a long time. I know you were on Wall Street, so you've seen all these things.
Sure.
So you don't spend $1,000 on a conference unless attendance at that conference is going to generate more than
Right.
$1,000 in revenue. Also, here's another big one I see a lot. You don't spend $10,000 monthly on a marketing services agreement with a real estate office unless you're going to make more than $10,000 a month in
Hmm.
revenue from that branch activity. You only spend money on expenses that leads to revenue.
Right.
And pricing concessions can be a big one that really, really hurts. So I feel like I'm babbling on
No,
and
I think you're so right. And that's why I wanted it in the book, because I think there's not a lot of understanding and you did a great job with it. But let's flip and look like the biggest opportunities going forward that you think managers really should be aware of.
branch managers need to think about measurement of the mortgage lending activity. That's
Right.
just, I keep saying it over and over, but sometimes branch managers have their hands tied behind their back because the report they get from the bank might not give them profit per loan detail like they need it. So mortgage lending has been around for a long time. I started in mortgage lending in 1981, long, long time ago. Mortgage rates were at 18%, and we're still here. And mortgage survives because of mortgage leadership. So, what mortgage leadership has to do is they must understand the dynamics of the market and find a way to be profitable in any market, including
Right.
2022, 2023. So leaders in mortgage lending must understand the things we're talking about. They must understand accounting, finance, efficiency, how to drive profitability, and they have to think through how's their operation going to operate. Like for example, I think retail model is always going to be present, but the problem is the costs tend to be pretty high.
Right.
So a call center model, I think, has lower cost, but the problem is it's just churn and burn, next, next, next. So they don't tend to spend the time with the borrower to really understand product options and what the customer really needs and help to take that path down the ability to repay, validating the customer has the best product. So there are things that we as leaders in mortgage that we need to think about and learn and apply. And so part of that is applying the components of pricing and success,
Sure.
meaning that you have to make money on the loans you do. So you want to only work on the loans that are actually going to make money.
Hmm.
And all this money, all this detail is in the book. So I feel like we're skipping a stone across the pond, Pat. So it's a little frustrating because there's so much more we
Oh,
can
sure.
talk about, but we got to keep this as a reasonably length video. No more
Yeah.
2 hour videos.
Well, as I said, we have to do another segment on all of that because I see it all the time. So, any other takeaways, Andy, that you want to share?
Well, generating sales with higher margins is what we need to do, but you need to make sure you've actually accomplished that. One of the ways to accomplish that is in what we've talked about in measurement is check to make sure that your P&L is not an interest margin P&L. Banks measure everything based on interest margin, earning assets versus costing liabilities. That's how banks operate. But in mortgage, we use a manufacturing P&L. So you've got to have a P&L that makes sense for your division. And I've actually we work with commercial banks to implement these things so that they can have measurable results out of their mortgage division. So if you're a branch manager and the bank doesn't give you a cost of sales based P&L, then we need to think of ways to be effective doing that and also understand the components that could cause volatility in earnings, like including the pipeline profit and then monitoring
Hmm.
concessions. But mortgage has been around a long time. Mortgage is always going to be around. People don't pay cash for homes as
For
a
homes,
general
right?
rule. So doing this well is important. Being part of mortgage lending is a great place to be. It's an amazing business. We help people's dreams come true because we get people into homes that they wouldn't have otherwise, and are with the rules like ability to repay. That's a good thing. We want to get people in a home where they can afford it and stay there and be happy, and we get to do that. That's part of what we do.
Hmm.
So love talking about this. If you want to ping me, find me. I'm on LinkedIn. But it's been my pleasure to work with Pat to write this chapter of her book. So thanks, Pat.
Yeah, I have to have you come back and we'll have to talk more in depth because I agree with you 100%. And I think that understanding the financial impact throughout all the positions and whether you're at a bank, a credit union, or independent mortgage banking is really important. And I agree with you that I think there's a lot of misconceptions for sure. So, hey, everybody who's watching today or listening, if you want to take a deeper dive into Andy's insight, he certainly shares a lot of it. More in the chapter, you go to Mortgage Manager Mastery.com or check it out on Amazon and purchase the book. Thanks so much, Andy.
My pleasure. Thanks, Pat.